What's going up, traders? So in today's episode, we are going to be learning the gap and go strategy. This is when a stock goes up more than 4% during pre-market hours and continues its trend during the market hours. And normally we can make upwards of $500 to $600 in the first 30 minutes of trading. So we're going to be going over our entry points, our exits, and how to find these stocks that we call gap and go. All right, the first thing I got to do before we do that is I got to make sure that I am good to go on my camera. Okay, so we are good, and this is my trading setup. I previously made a video on this, and I'll put that in the link in the description so you guys know kind of what I have set up. But okay, so let's say it's pre-market and it's 8 o'clock. The first thing I would do is check my gap up scanners. And honestly, you guys can get these for free. All you got to do is look up pre-market gappers on Google, and honestly, you can find them. But ideally, I would most likely find stocks like on your brokers, so they're all linked together and you don't have to type. You can just do one click and boom. Okay, so this is a stock that previously gapped up this past week. So within the past 3 days, I can see that it has a trend of gapping up and crashing, gapping up and crashing, gapping up and crashing, just like it did today. So this stock, okay, this stock is over its 290-day moving averages, meaning that this stock has room to run. It can shoot up 20, 30, 40% and not be halted by any resistance. It most likely will get halted by circuit breakers, and that's when a stock goes up over 10% on a single 1-minute candle. And so you can get held for a circuit breaker so people can calm down and the stock can kind of calm down. But anyways, so let's say if this stock is gapping up. The first thing I would do, so let's say this is all we see is this. Because the light dark here, the light black, I guess, or more the gray, excuse me, is considered pre-market. So honestly, this stock wouldn't even be up on our pre-market. We would find this stock during our momentum, our Momo scanner. And that's a stock that finds momentum in the market. So we're just trying to find a stock that had a pre-market. I think there was one what is it? CP? No, hold on. Okay, like I said before, all you got to do is go pre-market gappers. And I'm not sure if it's going to come up from today, but let's just see what we can find. Okay, so CIBO. I wish we could find. Okay, it was. Wait. CPAH was from today. So CPAH. Okay. So this is, let's make this a little bigger here. Let's get rid of our scanner. So this stock was on our scanner, and I will show you guys why it was. Okay, let's make that a little bigger. This is my 1-minute chart, 5-minute, 180-day chart. Okay, so this stock went from, let's go to drawing tools, and went from $2.70 all the way up to $3.30. And so this stock would have been up on our scanners. This was the stock that I did trade today. So this stock right here was maintaining its highs, that's what we look for. So the high pre-market was around 340. That was a very good support for it and resistance. And this stock the stock was maintaining it. You know, it was only within 10 cents during part of its pre-market, and it did continue to fall down. But this is kind of like a ideal setup. It would most likely sell off. So right here, this is just profit taking. This is when traders who are holding the stock from the other day wake up and they realize, oh, this stock's up 20, 30, 40%. I'm going to sell out and take my gains. So, but there's a ton of volume on this stock and a lot of buyers are into it because look at the volume and look at the sellers compared to the buyers. Okay, so this is what we would see for the pre-market. So an ideal an ideal entry would be at 341. And the reason of that is because it's considered a resistant breakout. So that means when a stock is bouncing up and hitting its resistance and can't seem to break it. Once it breaks it, it's going to get a lot more volume and a lot more traders are going to buy into it. And I'm going to show you guys that. So let's say we have our limit order already set for 341 or 341 because that's where the high of day or the pre-market highs were. So as it continues to go, bam, we get filled. Let's say we get filled at 353. Okay, so like I said, this is normal because this is profit taking. The reason why this candle doesn't look like this big spike up is the same reason, because these sellers are going to try to smack it down, meaning this stock's already up 30%. They're going to try to short it and make their money going the opposite way. But so that's why it's on a complete candlestick like this one. So we're already in at 353, and our stop loss is going to be the bottom of the candlestick. So right here at 305. And you might think that is a 50-cent stop loss, but this stock is moving so fast and the volume is already crazy. So it's going to continue to ride. So right here, bam, we're already in profit on this green candle. Okay, and we have a good entry because it's around 350. And 350 is a nice $0.50. So we're going to have that nice support there. And let's see what the VWAP is. Okay, 350. Where is that? Right here. Perfect. Right on the VWAP. Beautiful. Okay, so the VWAP's going to help it, and the $0.50 because people are more likely to buy in at the $0.50 because it's a more easy entry and exit. So this right here is a perfect entry. Perfect. So 350, we're in at 353, only 3 cents, not a big deal. But we're already up within 2 minutes. We're already up. Let's see. So we're in at 350. We're already up 9%. Okay? So we're already up. If we had $1,000, we're already up 90. All right, the next candle, this could be a sign of a reversal. So we're going to move our stop loss up to this candle. So our stop loss now is 369, and the reason of that is because if our next candle breaks that, it's going to continue to smash down, and we don't want to get caught in this big spike down because stocks do have a tendency to fall and get spiked down because let's see what the past let's go 30 or 20 days. Okay, so if you looked at this and you saw, okay, this stock went from almost $2 up to $3 and got smashed. So that could be what we were looking at. But we played it safe, so we have that stop loss. Let's set this back to 3 days. So that's where I like it. But okay, so now our stop loss is at 369. So we're understanding that this candle is kind of like a very deciding candle because it's a doji, and dojis are kind of something that could reverse it. So we're going to understand now we moved our stop loss. Bam, same thing. We're just going to sit back and keep adjusting our stop loss because now we're already in profit. We could add if we saw potential, but with this candle, I would not add to it because that could be a reversal. And the same thing. And now we're just kind of sitting back, adjusting our stop loss for below each candle. So now it went from 369 to 380. And now after this one, it's going to be right here at 397 would be our exit. So right here, our exit. And the reason why I say that's an exit because it broke the bottom of the previous candlestick. So now we're already up, but now this is where we look and say, okay, we're already up, upwards. Let's see what that would have been. So from here to here, this is a 11% gain. So now we're already up upwards. If we had $1,000, we're already up about $111. Okay, so now we say, okay, let's look for bull flags. Bull flags are when a stock goes up, makes a flag, and continues up. So we're gonna see if this will continue up. We already have $100 in the safe. Now let's see if we can make that $500 to $600. So let's get rid of this drawing tool and get this one. All right, so this right here is perfect because if we had this huge seller set in and drop it all the way back down to $3, we would not have a good entry. And compared to the buyers, the sellers are nothing. No one's selling the stock because it's moving too hot and too fast. So we would do the same thing. Buy in when it broke the previous high, when the green candle broke the previous high of the red. So we're going to hop in this at 313 or 413 or 414, whatever that was. We just want it to break over so we have the momentum. And we're going to have an exit at 386. So right here. In this, let's see what the percentage here is. This is about a 5%, 5% risk to make about upwards of 15. The averages. Okay, so now we're already in. We're in at 314. Let's continue to ride. All right. So whoops. So here, these are just very trend-setting, bullish candles. So we could hop in when it broke this, because this was the high of the other one. So when it broke it, we would always try to find a whole number. So 440, we could add. And now doing that, we're going to make more money and faster. So now our average will be around, 420 area. All right, so like I said, right when it broke this high of this candlestick right here is when we hop in. So we're in, bam. So now our average went from 413 to about 420 area. So doing that, we're just going to continue to ride and look for that stock that breaks the previous, breaks below the previous candlestick. So we're just going to sit back and ride this. That's a very important term. We're just going to ride stocks. We're not going to fight trends, meaning we're not going to try to go short here. That would not make any sense. I don't get why people would even try that. Because this is the trend, is going up. It's already up pre-market. It's continued to go up. And I'm always going to be keeping an eye on resistance lines. So let's look back here. So we do have some resistance here at about $5, and that's a long ways away because right here, that's where it hit in the back or a while ago. So we do have some resistance at about $5, but we're just going to continue to ride this. Continue to ride. All right, so as you guys see here, let's zoom in a little bit. Whoops, wrong one. All right, where are we at? Where are we at? Okay, we're right here. As you guys see, this candle broke this. Okay, so we're going to sell out at 463. And so let's see what this is, 15%. Like I said, you risk about 5% to make 15%. It's not the best risk to reward, but it is about 3 to 1, which is very good. It's very good. It's a very common trend or a pattern. Okay, and as you guys can see here, this broke this. And I'll tell you why I would not trade this. I never trade on the third flag. So here we have one flag, two flag, and this would be our third. And this is a very important strategy right here, is because a lot of traders, this is when a lot of traders hop in, and a lot of short traders, because we have this $5 resistance in a couple weeks ago. So I already know that short sellers are going to smack it down. But if it broke over $5 and maybe to about 5.10 area, that would be another good entry, because then the next resistance would be 7.30. So that would be $2 we could make off this single trade. But so then we would just continue to just watch it, and as you guys can see, it just fades off, fades off, fades off, fades off. And this, all of this is happening. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Within the first 14 minutes of the stock market, you're up over 25%. With $1,000, that's $250. With a $25,000 account, that is a lot of money. So that's going to be it, though. That is my gap and go strategy. I hope you guys enjoyed this video. Please sure to hit the like button. Leave a comment. Let me know what you guys think about these videos. I love you guys. Peace out. Thanks for watching. Bye-bye.